for joining us on this rainy night if you're in New Jersey. My name is Katie Myers, and I'm the Marketing and Communications Manager here at Manasquan Bank. And I'm so happy that you decided to start your home buying journey with Manasquan Bank. We have a great presentation for you planned, and we want to just note some items before we jump in. We are recording this call. And we will be polling throughout the seminar, so be sure to pay attention and interact with the polling. You'll also have the opportunity to ask a question. You could either raise your hand or add it in the chat. So let's get started. For those who may be unfamiliar with Manasquan Bank, we've been around since 1874. That's pretty remarkable. And we do it all. We have mortgages, construction loans, business loans, and everyday banking like checking and savings accounts. We have 15 branch locations in New Jersey. They're located in Monmouth, Middlesex, and Ocean counties. Yet you don't have to live in those counties to open an account. You can do that through our website, www.manasquan.bank. And as technology evolves, so has our traditional banking capacities, and we're so excited to be able to provide you with everything that you need to do to bank at your fingertips. Our friendly, knowledgeable staff is ready to help you attain your goals, and some of those friendly, knowledgeable staff members are here with us tonight. We have Robert Hart, who is our Senior Vice President, Director of Residential Lending, and Ralph Tancrini, Senior Vice President of Residential Lending Sales Manager, joining with us tonight. And thank you, gentlemen, for hopping on the call and being our speakers.
Thank you for having us tonight.
Thank you very much, Katie. I'd just like to welcome everyone. We're glad you could attend tonight. A little bit about what you can expect tonight. We are hoping to give you an overview of the mortgage buying process. We'll discuss the realtor's roles, the lender's roles, the attorney.
We're going to discuss all the roles.
Yes, we are. Title companies. There will be a review of mortgage options, including Manasquan Bank's programs, first-time homebuyer programs, a low to moderate income program. We'll also talk about third-party resources. They could be avenues for grants. We're going to talk about appraisers. We're going to talk about closing agents, and then we're going to go through some of the next steps. Some of the reasons why you may be looking for a home. Maybe you need more space. Maybe you're tired of renting. And again, maybe you just have noisy neighbors. But now you're finally deciding it's time for us to take a serious look about moving on to our next step in buying a home.
Okay, so once again, good evening, everyone. Thank you for taking time from your day to join us tonight. I hope when we are finished, you will have a better understanding of the overall home ownership process. So let's get started. The first topic I would like to discuss with you tonight pertains to budgeting for home ownership. One of the most important things to consider when purchasing a home is your monthly mortgage payment. You need to consider this and also consider other expenses that you're going to incur monthly. If, for instance, if you're purchasing a condominium or a townhome, you'll be responsible to be paying monthly homeowners association fees, and this is paid separately from your mortgage payment. You need to consider everyday maintenance costs. You need to consider eating, groceries, your utilities. So it's not just making your mortgage payment that you need to be concerned with. You should also have reserves for unexpected life events. For instance, your hot water heater could go on the fritz. You could need a new furnace or air conditioning repairs. The roof of the home could need repairs. Windows could be repairs. You just need to consider all of these things when thinking about purchasing your first home. So next, Bob will talk to you briefly about credit and what's important about your credit.
Thank you, Ralph. So let's discuss. Somebody buying a home, there are many, many factors, one of which is your credit. Credit, as you know, comes from the way you pay your bills, the way you pay your car loans, the way you pay your mortgage. And the four major credit bureaus are Experian, Equifax, and TransUnion, the three major. Credit Karma is an avenue that's out there for the consumer where you could go out there, put information in, They have the ability to look at their report, and they have their own scoring system. Again, Credit Karma is used more for the consumer. They don't necessarily match the scores of the other three bureaus. Katie?
Yeah, so Bob, we actually received a question prior to the call, and they want to know what's the fastest way to improve your FICO score?
That's a great question. So there are many ways that you can improve your score. A few are simply pay your balances down, your credit balances down on your credit cards. Take out, sometimes you have what's called the thin file, which means you don't have many credit cards. You don't have many credit references. So keep in mind, if you have 3 credit cards and they're maxed out to their limit, that's going to negatively affect you. You want to keep your balances under 40%. If you could get them under 30, it's even better. That keeps your score up. Another reason is if you have installment loans. Some people who don't have credit, let's back up. You may want to get a secured credit card. Secured credit card could also help you here, because some people have minimal credit, may not qualify for a credit card. So there are other avenues, such as keeping your balances low. You may have other cards, pay them on time. Always pay them on time. That's the key.
And Bob, are there opportunities for those who may not have great or low credit scores?
So when you're looking for a lender, you want to look at somebody who's like us. I know this is a little commercial here, but you want to look at somebody like a local lender, because the local lender will look at it a little differently than the major banks or the mortgage companies. They have minimum requirements. We will look at and have discussions with you, such as, I see you have minimal credit. You may have been living at home. You may have been renting. You may have no credit, but if you are renting, we could look at utility bills. We could look at your rent checks, and we could take that into consideration when granting credit. What we do here, Katie, as you know, and everybody here will learn, that we are big on relationships. We're here not just to provide your mortgage, we want to become your bank. So therefore, we look at each and every application in a personal way. Unlike the bigger banks or the bigger mortgage companies who simply have their standards and say, I'm sorry, you don't qualify. So again, you want to find somebody who's willing to listen to you, that you could talk to.
Bob, thank you so much. We're going to move on, okay?
Sure. So one of the big steps in finding a home is location, location, location. This is a very, very big step for you in your lives. So you want to understand, where do I want to live? Do you want something that's central? Do you want to be in a neighborhood? Do you want a development? Do you want acreage? Do you want to live by the shore? Do you want an urban area? Do you want to live by a train station so you could get, somewhere downtown where you could get to and fro from a train or mass transit? You want to look at school systems. Some people, it's very, very important. They want to work close to home. Other people say, I don't really mind a ride. And again, you want to be careful, because do you want to live in a flood zone? If you want to live in a flood zone or near the shore or near a stream or river or wherever, if you're in a flood zone, that could add increased cost to your monthly payment. So you need to take all of these things in consideration when you're looking for a home.
Bob, thank you. I just want to take one step back. We did receive
Sure.
a question in the chat. We have a car loan. Should I pay that off before applying or keep that money in the bank?
So again, each and every case, each and every loan applicant is an individual case. So it's not as simple as that. What I would do first is, number one, if you can afford to pay your car, hold on to your money, make the car payment. Come in and talk to one of our lenders. We'll sit down. There's no obligation. There's no fee. There's no cost. Come in and explain what you're trying to do and what you want to do. When you're serious in the process, we could look at it. We could pull your credit. We could look at your income, and then we can make a determination, say that car loan has to be paid off or the car loan has to be paid down. Same thing with credit cards. If somebody's out there with credit cards, we may say, in order for you to qualify for the loan amount that you're looking for, you may have to reduce some of your consumer debt. That's a great question. Home features. Similar to what I just said about your location, where do you want to live? Do you want to live by the shore? Do you want to live in the mountains? You also want to look at, what type of features do I want in my first home? You want something that has a big living room? Do you want something that has a finished basement, big backyard? Or maybe you say, you know what, I want a nice condominium, I want a townhouse where I don't have to worry about the yard. Or I don't want a lot of acreage. I don't want to be on weekends. I don't want to be tied to my yard. I want to be able to go out and do things. So these are all things that you should look at up front. And what I'm going to do, Katie, because it ties into the next slide as well, if you don't mind. So along with location, the style of home you want, floor plans, look at layouts and flows of a home. You're not just buying a house for today. So what you should do is, even if you're not ready now, maybe what you should do in this process is pick a weekend or go visit 1 or 2 homes on a weekend, just so you could kick the tires and see what's out there. See what you really like, because you may think that you like a ranch, which is a 1-level home. Whereas instead you may say, you know what, that's not what we want. We want a little separation. Maybe you want a bi-level that has 2 levels. Maybe you want a Cape Cod that has an upstairs or a colonial. So my advice to you is just don't look at homes in a book. Just don't look at floor plans on the internet. You should go out. Number one, do your homework. Go out. It's no obligation. Get an understanding of what you really like. Take it for a test drive. Go out and look at the homes. The second thing you should do is, again, just be ready. You want to do your homework now, because we'll get into the market in a little while and the home buying, what's going on out there. But what you want to do now is you want to get an idea for what you want. So when that house becomes available, you can act. It's not so much an impulse purchase. Really get an idea. It's similar to when you go out, and those of you who have ever purchased a car, I'm sure you didn't just walk up to the lot and say, I'll take the blue one. I'm sure you had an idea what you wanted. You took them out for a test drive. Well, you can't live in the house for a test drive. You can at least go out and look at floor plans, look at yards, and get an understanding. Be very open-minded and don't be afraid to ask questions. If there's a realtor there, you're not bound by that realtor, but don't be afraid to ask questions such as how the school system is, how much are the taxes in the area, things like that. The current housing market, this is a slide that we've looked at this presentation as late as yesterday. And I have to tell you, the ever-changing market is so true. There's still low real estate inventory. There's still competitive and multiple bidding. So what I mean by that is, when you go out there, keep in mind that you're not the only one looking at that house. You're going out there, other people are going out there. There's an asking price, and then you're going to make an offer. Number one, you want to make sure that you have an offer that fits your budget. So that's why it's important, again, that you come in, speak to one of our loan representatives, let them help you so you understand what you're pre-qualified for, what you'd be pre-approved for, so you could shop in your price range and understand your budget better. Mortgage rates today, this says a 12-year high. I just read an article this morning that these rates today are as high as they were in 2007. So we'll have to update that. So we're actually at a 17-year high. You want to be prepared, as I said, you want to get a pre-approval. What a pre-approval is, you're going to come in, talk to the loan officer. You're going to show them your income or explain your income. We'll pull credit, look at what your credit is like, number one, with your credit score. You're going to look at your debt structure to see how much your monthly consumer payments are. And then they'll be able to tell you how much you qualify for a mortgage. And again, I can't stress enough, we're here, we're available. We listen.
All right, so let's get into the overall mortgage process. The process begins with your loan officer. You want to make sure you're working with a licensed and an experienced loan officer. This is going to be one of the biggest investments you make in your life. So you want to be working with somebody that's very experienced and can help you and handhold you through the process. It's important that you consider using a local community bank instead of an online mortgage provider. An online mortgage provider is usually located out of state. Here at Manasquan Bank, we're going to provide the best service and personal service to you. When when looking at different mortgages, you want to explore what options are available to you. Is it to your advantage to take a fixed rate mortgage or an adjustable rate mortgage? And in this environment right now, the way rates are up, like Bob said, we're at almost a 17-year high in interest rates. More people are leaning towards the long-term fixed adjustable rate mortgages. Because this is going to be your first purchase, and most likely you're going to move up into another home within the next 7 to 10 years. So why not consider taking a long-term adjustable rate mortgage that's fixed for 7 to 10 years, as opposed to taking a 30-year fixed mortgage that's going to be at least a point to a point and a half higher in an interest rate. So you'll be saving money for the next 7 to 10 years if you do take an adjustable rate mortgage.
Ralph, can you once again just expand a little more on the what an adjustable rate mortgage is? I know you said it briefly, 10 or 7, but just want
Sure.
to make sure that people are clear.
Sure. So an adjustable rate mortgage it can be any term. It can be a 30-year term. It can be a shorter term. But when we talk about a 10-1 adjustable rate mortgage, what that means is the interest rate's going to be fixed for the first 10 years. And then after 10 years, it'll adjust every year depending on the current market situation. Same thing with a 7-year adjustable rate mortgage. The interest rate will be fixed for the first 7 years, and then it'll adjust after that. Let's talk about the 10-year adjustable rate mortgage. After the 10th year, the most that the mortgage can increase, the interest rate can increase on you is 2%. It can only increase 2% per adjustment. So for instance, today, if you took a 10-1 ARM, adjustable rate mortgage, the current rate is at 5.625%. In year 11, the most it can adjust up to is 7.625%. Now, the 30-year fixed rate today is at 6.5 and probably going to be going up to 6 5/8 to possibly 6 3/4 tomorrow. So that's why it's to your advantage to take these long-term adjustable rate mortgages for your first purchase. The life of a mortgage loan is 7 to 10 years anyway, between buyers moving up or refinancing out. And that's another thing to consider too. You can always refinance out of an adjustable rate mortgage into a fixed rate mortgage if the rates do drop within the next 7 to 10 years, or if they drop within a year from now. There's no prepayment penalty if you were to refinance out of an adjustable rate mortgage into a fixed rate mortgage.
And again, keep in mind what Ralph is referring to is Manasquan Bank has what's called a modification program. So from our perspective, you can refi, you can modify. We try to make the process simple. We're trying to keep the cost down for you as a customer, you as a consumer. Some banks out there are simply going to say, or mortgage companies, I can't modify, you'll have to go through a full refinance again, put you through the old process again, cost you more money. Here at Manasquan, what we try to do is keep the process simple. So.
Bob, Ralph, thank you so much. And we did receive a question. Do you expect to see mortgage rates continue to rise through the end of the year?
I believe they will. I mean, obviously nobody has that crystal ball, but based on everything that's going on in the market and in the world today, I think the interest rates will continue to increase a little bit before the end of the year. Bob, your opinion?
No, I would agree, Ralph. Basically, what they're saying is the Fed is saying they're going to raise their rates 1 or 2 more times. So as Ralph said before, we're probably going to move our fixed rate loans up tomorrow, the interest rate on those loans. But keep in mind, when the rates go up, what that typically affects, obviously, is your payments are going to go up. But sometimes it also affects your ability to take a larger loan amount. So instead of qualifying for $150,000 loan, maybe you can only qualify for a $135,000 loan. If you have the financial wherewithal to still carry the payment at a higher rate, to Ralph's point before, it shouldn't deter you from necessarily wanting to own a home at this time. Because again, as Ralph mentioned, you could turn around and modify the loan with us from either an adjustable back to a fixed, or if you wanted to take more money out down the road, or if you wanted to purely refinance, there are many, many options for you. This is not your only loan you're ever going to have, and most likely it's not going to be your last home that you're going to live in. So that's a great question with the rates, and yes, unfortunately, it appears that they will be going higher. But if you follow the rates over the past 20, 30 years, Rates go up, rates come down. So if you could still afford in this market, it still should not be a deterrent from you purchasing.
Bob, you mentioned programs, so I think that's a good segue into our next slide.
Well, before we get into the programs, Katie, there was a few
Mhm.
more things I wanted to discuss on the prior slide, if you don't mind.
You got
And
it.
then we'll get into the first-time buyer programs, because I was going to touch on that also. So another thing to consider when buying a home is the down payment that's required. What percentage is needed to be put down on the home to get into a mortgage program? And there's many options. You can put as little as 3% down. 5% is preferable. It gives you a much better private mortgage insurance rate. And what private mortgage insurance is, when you purchase a home, normally you need to put 20% down to avoid private mortgage insurance, which is a monthly cost that's added onto your mortgage payment. Here at Manasquan Bank, we have our own first-time homebuyer program. If you were able to put 15% down, we will waive that PMI requirement. We will not require you to put a 20% down payment. So that's a great advantage that we have here at Manasquan Bank. Another perk of the first-time homebuyer program is we will refund the $250 application fee at closing. And there are incentives to take an eighth off the interest rate if you do get a mortgage with Manasquan Bank and choose to have that payment automatically deducted from one of our personal checking accounts. So down payment can vary, like I said, from as little as 3% to as much as you want. Obviously, the less amount of money you put down, the higher your mortgage payment will be. Another facet of the mortgage process and the loan process is fees and rates and so forth and points. We are the direct lender here, so our fees are extremely low. You'll pay more points and higher fees. They're typically charged by mortgage companies and online providers. One of the things we pride ourselves here at Manasquan Bank is we keep not only our rates low, but our fees are extremely low. We do not charge what I refer to as garbage fees. For instance, when you lock in your interest rate here at Manasquan Bank, we do not charge a fee to lock in the rate. A lot of other lenders and online mortgage providers will. So it's very important to know the flexibility you have with mortgage programs, the down payments, and the fees that the lender will charge you. Bob did briefly speak about what's difference between a pre-approval and a pre-qualification. And basically a pre-qualification, if somebody gets pre-qualified, it's a matter of the loan officer running your credit and taking some information from you, verbal information over the phone, as far as the income you're earning and the assets you have. When you're going to get a pre-approval from a bank, it has more weight, not only when the seller is looking at the letter that they received from you saying you're qualified. It's something that the realtors are preferring these days. They want a pre-approval letter as compared to a pre-qualification letter. And again, like Bob had mentioned, with the pre-approval, the loan officer will not only run your credit, but they will collect your income and asset information, and they will do a thorough review of it to make sure that the income you say you're earning is accurate based on the way an underwriter is going to look at it. So it's definitely a more in-depth approval process when we get your income and asset information from you. And then most people always ask, and the realtors are asking this today, how quickly can we turn a loan around? How quickly can we get you to the closing table? There's a lot of moving parts in a loan process and a loan application. It's not only working with the borrower, but it's working with the realtor, the attorney, the surveyor, the title company. If everybody works together and works in a timely fashion, there is no reason why you cannot close a purchase transaction within 30 to 45 days. And once the process is officially started and you're out of attorney review on a home, there is no reason why a mortgage commitment should not be issued to you and your attorney within 10 to 14 days from the time the appraiser is out at the home. All right,
Ralph?
Bob, if you want to now talk about some of the first, yeah, I'm sorry,
Oh.
Katie.
That's okay. We did get a question in the chat. So I just want to ask, how long does pre-approval last for once you have it, and if there is a limit?
So the pre-approval normally lasts for 120 days from the date that we run your credit report. We'll continue to update your income and asset information during the pre-approval process and when you're actually under contract and in processing and underwriting with a file.
Great, thanks so much.
Katie, could we
And
stay
one
on the
thing
slide?
that's, let's go back to that also. One thing that's very important, Bob was talking about credit and debt and so forth. One thing that's extremely important is once you are pre-approved or you've actually gone through the underwriting and you were issued a mortgage commitment, you want to make sure that you don't incur any additional debt. You don't want to go out and buy a new car loan without speaking to your loan officer first, because that new debt could disqualify you from the loan. So I've had this problem come up a few times, and now I make sure when I talk to any first-time home buyer, I let them know that once the mortgage commitment is issued to them, do not go out and incur any new credit. Do not go out and buy furniture and charge it on your credit card, because we're going to do a credit check prior to closing, and this additional debt and additional monthly obligation could cause you not to qualify. So my advice is do not take on any new debt until the closing papers are signed, the ink is dry, and the keys to the home are in your hand.
Katie, I just want to add a couple things here with what Ralph said. We sit here and we do this every day. We like what we do. We're very comfortable with our customers. I just want to go through what an online mortgage provider is. I'm sure many of you have seen ads for Rocket Mortgage, for Quicken, for Lending Tree. So really, these are online providers. You're going to do everything through the internet. You may not speak to somebody. Some of them have fees if you want to get assigned to a particular person. Rest assured that when you deal with Manasquan Bank, if you're dealing with Ralph, Ralph is your loan officer through the whole process. You will speak to Ralph. You'll speak to our team here. Our team, we're centrally located. We're in one building. So again, if somebody has a question, you're not waiting for a call back from somebody out of state. You're dealing somebody here in New Jersey. We deal statewide. So no matter where you are, if you want to come see us, if we want to have to go see you, that's fine. If you want to do it via Zoom, but you will see a live body as opposed to just picking up the phone and speaking to somebody. Keep in mind, this is one of the major steps in your life is purchasing your property, your first property. So. Thank you.
Yeah, and to add to that with the online mortgage providers, a lot of times they'll take the information through their online app, and the information that's given to them, if it's not accurate and it's not reviewed by anyone, obviously you could be issued a pre-qualification or a pre-approval letter that's really not that strong and valid. That's why it's important to have a loan officer always review the income and asset documentation. You want to have a pre-approval letter that you can give to your realtor that you can stand by.
Okay, let's touch on some of the first-time homebuyer and community mortgage programs. So one of our lending specialists here, as we described them in this slide, can guide you through the entire process. So you will come in, they'll lay out the process with you. You will have many, many questions. As Ralph said, there are many moving parts. We offer what's called our Home Start program, which Ralph discussed as far as first-time homebuyer, 15% down or less. If you want to put more, that's great. It's available to low and moderate income households. It's also available to all households. So no matter what your income is, you're able to qualify for a first-time homebuyer program. As far as qualifications, when you go outside and go to another, whether it's the county or state, they offer programs that sometimes have down payment assistance or loan assistance. Those programs have income limits, so we would be subject to whatever limits that program imposes. The Federal Home Loan Bank has something called the Home Buyer Dream Program, which they advertise in March of every year. They come out with up to, is it $14,000, Ralph?
The No, I believe it's down to $9,500 in that home buyer grant, and they'll also offer you up to $500 to be used towards a home buying counseling course.
And why don't you touch on the home buyer counseling course while you're there?
So with many of these first-time home buyer programs, one of the requirements is to take a home counseling course. And it's basically a course, sort of like what we're doing tonight. It explains to you the process of a home buying. It wants you to be aware of not only you're responsible for a mortgage payment, but you want a budget for your groceries and so forth. I've seen sometimes where some of the easiest and, questions on there is when leaving a home, should you leave your stove on or turn it off? I mean, they're pretty easy questions, but it does give you a basic understanding of what to be aware of when purchasing your first home. It is by no way any challenging type of a counseling course. It's just something that needs to be completed. And it's one of the checkpoints or bullet points. They say that, hey, my applicant completed this, and this is one of the qualifications to get the grant.
Bob and Ralph, we did receive another question in the chat, and it does go back to our pre-approval conversation. They want to know, is there a reason to get a pre-approval for the most possible, or should you get a lesser amount so there's some room?
Well, so if you play poker, you know that you don't want to always show your hand. So you never want to show a seller that you're pre-qualified for, let's use round numbers, a $300,000 or $400,000 purchase price when you really only want to bid $375,000 on this house. If the seller knows you can afford up to $400,000, they might not want to negotiate with you. They want to, keep firm to their $400,000 asking price. So I don't like to show my hand right up front to the seller. If they're asking $400,000 for a home and you're comfortable paying it and your realtor thinks that's a fair price, obviously you submit your offer at $400,000. You don't submit an offer that says you can afford a house that costs $450,000, because now the seller knows you can afford more and they might want to get more out of you.
Right. The second point I want to add to that is from a personal perspective. Keep in mind, when we qualify you for your loan amount, we're going to take your gross income. So if you make $40,000 a year, we're going to take $40,000 over 12 months. We're going to take a percentage of that. That is not what you bring home. So your take home is going to be considerably less. You know your budget. If your rent today is $1,500 and you feel comfortable going to $2,000 a month or $1,700 a month, you know your budget. We may come up with higher numbers for you and say, guess what? Based on our numbers, you could qualify for $2,300 a month. So what we qualify you for is different than what your personal budget is. You need to understand your budget. We can help you go through that. And that's what the home buyer courses help you with as well. We can help you with your budget and explain, what you could truly afford personally versus what we qualify you for. You have to keep in mind that when you go in, and we've all been there. I know that us and here at the bank, we've all been through this. First home, you're very excited. You're great. You scrimp, you save, you put everything together. You go buy that first home and everything's happy. The next thing you know, you wake up one morning, your hot water heater's not working. Now you're going to say, oh my God, all our money goes into the mortgage payment. How are we going to get the hot water heater? So from a personal perspective, it's personal comfort. You want to make sure that you can afford the payment comfortably, that you can still afford to put food on the table, pay your utility bills, fix that hot water heater if you have to. So Ralph is right on his point saying you never want to tell them that you could qualify for more, because that may affect whether they take your offer or not. They may want to push you for a higher amount. But again, stay within your budget. Make sure that you're comfortable. Great questions. Keep them coming.
We're good to move on?
Yep.
Okay.
Okay. So the next important thing in the home buying process is after you're pre-qualified or pre-approved for a mortgage and you're ready to go out shopping for a home, you want to make sure that you choose the right real estate agent to help you through this process. You want to use someone who is actively in the business and is experienced, especially in this competitive market that we're dealing with. You definitely want to be working with somebody that has a lot of experience. It pays to be working a lot sometimes with a realtor that has a team around them. You know, if they're not available, one of the members on their team is always going to be available. Uh, Look into the history of the real estate agent. You know, when you look up a real estate agent, they normally will post if they've won any awards for the amount of, homes they've sold and so forth. Obviously, if they've got a lot of awards, they're a very good realtor. That's who you want to work with. And make sure they have a sense of urgency as it concerns to your needs to find the right home for you. That's another very important factor. This home is for you, not the real estate agent. So make sure that they're looking at homes that you are actually interested in. The realtor should be familiar with the area that they're working in. So, if you're down here in Monmouth County, do you want to be working with a realtor that previously that's very experienced up in Bergen County, New Jersey? Probably not. A lot of times the realtors, they can refer you to an experienced realtor in the area that you're looking at. And the other thing you need to be prepared to is to move quickly, because the homes are getting sold quickly still. So the realtor will find something for you. You need to be ready. You have that pre-approval letter, and you need to make the decision on whether you want to act and submit an offer quickly. Because if you take your time, you're going to find out that somebody else, they accepted an offer from another prospective home buyer.
Just to add on something that Ralph said, many of us have friends or family in the business. Our aunt is a realtor up in North Jersey or in Pennsylvania, and I can help you find a home. And you just have to be very careful, because why they're doing it is obviously they're trying to save you money, which is a great thing. They are trying to help you through the process, but you could use them in a way where they could help you in the process and just to guide you and make sure that they're active, make sure that they have the time to properly help you. I'm not saying that that's a bad thing to deal with family or friends or family. It's a great thing because they could save you money when it comes time to commissions. But again, make sure, to Ralph's point, that they are active, because if they're doing it part-time and they have many children at home and they're tied up in different things and they're distracted, this is the time where you really need somebody who's available that's ready to work for you. Because the market, while it has softened over the past 6 months, it's still very, very competitive. They're looking for responsiveness. Sellers want to know that you're ready to go. And the last thing you want is the realtor sitting there holding you up. No.
Bob and Ralph, we did receive a question in the chat. Is there a difference in loans for buying your first home to live in versus buying for an investment property?
Yes, there's a big difference. The major difference is the interest rate and the products available. It is more difficult to get a loan on an investment property. There's more risk involved as far as the underwriter's perspective. The down payment requirement on an investment property is a minimum of 20%. And the interest rate is normally, it could be at least a percentage point higher. And the products that are available, there's not, for instance, you're not, it's very hard to find a 30-year fixed investment property loan that's competitively priced. So the products that are available are shorter terms, or sometimes they only offer adjustable rate mortgages. So yes, it is totally a different product when you're looking at investment properties. And the underwriter wants to see that you have experience as in being a landlord. It's very difficult to get an investment property if you don't have any experience being a landlord. So yeah, there's quite a bit difference between a primary home and an investment property.
Thank you.
All right, so we'll continue on the role of the real estate. We did touch on some of these things before. Obviously you want your realtor to find the right house for you. That's what I had stated before. This is the house that you're going to live in, not the realtor. So you want to make sure that this house is for you. Your realtor should only present the seller with a qualified pre-approval letter. Um, a, a pre-qualification letter, like I stated before, is something that sellers will accept, but now most of them and most realtors only want to present pre-approval letters. And again, the pre-approval letter means we have reviewed your income and your asset documentation. So you submit a bid to a seller and your bid is accepted. Congratulations. The next thing that happens is you start a process called the attorney review process. The realtor will write up the contract, submit it to the seller accepts the offer, and now the contract is sent to your attorney, and the seller gets the seller's attorney also gets a copy of the contract. So you want to make sure when you're going into a transaction that not only do you have a real estate agent in mind, but you have an attorney in mind that you want to use. And again, you want to use an experienced real estate attorney. That's very important. The attorney review process, what happens during that process is both the seller's attorney and the buyer's attorney are going to review the contract that was presented to them. And they're going to negotiate different items on the contract back and forth. Once both parties are in agreement, then the attorney review process ends. And it normally takes about 3 days to get in and out of an attorney review process. Once the home, or the contract, I should say, is out of attorney review, then things really start getting moving on our end, on the mortgage end. We get a copy of the contract from you. We get all your attorney's information, and we start the processing of the file. Processing of the file means we submit the file to our processing department where they're going to order the appraisal and so forth. One of the things that we do here at Manasquan Bank, which is very important to you, is before we order an appraisal on a property and spend your money on an appraisal, we normally wait until you get a home inspection done. And that home inspection is done either during the attorney review process or after the attorney review process is concluded. Now, like I said before, this is it's a major investment in your life. So you're going to want to spend money to get an inspection done on the house that you're going to buy. Obviously, if it's a newly constructed home, there really isn't any, it's not that necessary to get a home inspection done on a newly constructed home. Once the home inspection is completed and you advise us that the inspection is satisfactory to you and you're going to continue on with this purchase transaction, at that time, we will place the order for the appraisal. Because, like I said, we don't want to spend your money on an appraisal for a home that you might not get because something came up major in the inspection that causes you not to purchase this property. All right, so the inspection is done. We order the appraisal. We wait for the completed appraisal report to come back. Once it comes back, we have your appraisal. I have all your income and asset documentation. And then what happens next is we put the file into underwriting. The underwriter reviews everything, issues the mortgage commitment, which is the approval. That mortgage commitment is sent to your attorney. You advise your realtor, because your realtor is always going to be asking you, did you get your mortgage commitment? Did you get your mortgage commitment? You advise your realtor that you did get the mortgage commitment. And then the next stuff after your mortgage commitment is issued is we start to move towards the closing process. And the realtor is going to still be involved, because what they need to do is they need to assist with inspections for the occupancy of the house. Their job isn't done until you go to the closing table and the paperwork is signed. The day before closing or the morning of closing, the realtor will normally do a walkthrough of the home with you to make sure that everything is fine at the home. There was no damage done, or appliances were taken, or things like that. You want to make sure that the house that they're delivering to you is in the condition that it was promised to you. The realtor can also assist you in switching the utilities into your name. That's another thing that needs to get done. These are all things that you might not think about because you have so many things to think about with this first-time home buyer process. And the job of a loan officer and the realtor and the attorney is to help you through this process, to make you aware of things that you normally would not think of. Anything you need to add to that, Bob?
Well, the only thing I want to add, Ralph, I think this is a great time with the inspection. So just because you go in there and have a contract and comes out of attorney review, it doesn't mean that necessarily you're buying the house in an as-is state, unless, of course, the contract says that. As Ralph said, you could come in there through a home inspection and find the heating system needs to be replaced. The chimney needs to be replaced. The deck needs to be replaced, whatever it may be, you're not necessarily locked in. So you'll speak to your attorney will speak to their attorney and say, our home inspection came up with this. We're looking for a creditor who wants you to repair it before we close. So we don't want you to think that you're buying it as is, unless, of course, the contract states that. So that, again, you'll be using your attorney for your assistance in that process.
All right, so continuing with the attorney, Bob, do you want to speak about the process of the attorney in the transaction, what they're going to do for the home buyer?
Sure. So as Ralph said, basically, up front, your attorney's going to review the contract. Some people believe that I don't need an attorney. I can, we'll just go through it. I like it. My realtor knows what they're doing. Our recommendation is you should have an attorney, especially when you're buying your home, especially when you're buying your first home. You need somebody to look at the contract, make sure there's somebody in the corner for you. The attorney then will order title insurance. Title insurance makes sure that when you close on your home, what we mean by closing is you go and sign your mortgage documents, you receive the funds from the bank, give them to your attorney, the attorney turns around and pays the seller. They're going to order title insurance to make sure that there are no other liens, which means no other mortgages or any other encumbrances on the property that may become a problem later on. You want to order a survey. Your attorney will order a survey for you. When you buy your first house, or any home for that matter, you want to make sure you get a survey. The survey shows you your meets and bounds, shows you your property lines, shows you exactly if you want to put a fence up, if you want to put a pool up. You should know where your property lines are, because what you may think is your property could actually be your neighbor's. Even though the homeowner's bushes go over a little too far, that may not be your property. You want to make sure your survey is done so then you know exactly where your property lines are. Your attorney will also review the closing costs with you. They're going to go through the cost of your title insurance. They're going to go through your attorney's fees, any other miscellaneous fees that come up when you deal with the bank, when you deal with a mortgage company, or any other fees in general, such as your real estate taxes. Manasquan Bank escrows, we take a portion of your real estate tax payment every month. So when your bills are due every quarter, we have the money to pay it. This way, you're not worried about making sure that you put that money away in your savings. And again, last but not least, as Ralph touched on, your attorney's involved with the closing documents. Your financial institution will prepare the documents, most of them. Your attorney also has to prepare documents on their side for the new deed. The deed is your home ownership. It says that you now own that property. The bank turns around and places a mortgage on that property for the money that they lend you to make sure that if and when you go to sell the house, the bank is satisfied that we're paid off. So. This is probably one of the most important slides in this. Keep in mind that what we're doing in this hour-long discussion, I'm going to call it, really is a lot longer discussion. One thing that you have control over, this process is not a one-size-fits-all. There isn't one mortgage loan type. There isn't one home that's set. It's not like coming in and buying a bar of soap. Everything is based on your individual situation, your income, your credit, how much you're putting down. No two situations are alike. What we recommend is save now, save often, and save as much as you can. If you come in and speak to one of our loan officers and we say you can afford a mortgage payment of, again, I'll say $1,700, and right now you're paying $1,300 a month in rent, my recommendation is to take that extra $400 every month and put it aside and see how you live. Make sure that you truly can qualify and feel comfortable with that extra mortgage payment. You want to test it. You don't want to get into the house and realize, oh my God, I can't afford to live here. You don't want to do that. So we have great products here that you can save. If you're at a financial institution now, you could save there. I'll let Katie talk about that, but I can't stress enough. You really want to simulate, if you simulate a new mortgage payment and try to save that money. This way to give you peace of mind and help you understand what you can afford. As far as where you can put your money, I'll let Katie touch on that.
Bob, thank you. And we are under the 10-minute mark, so we'll speed this along. But Manasquan Bank does have some amazing products to help our clients save for their future home. Our Infinity line of products earn you impressive interest rates for normal tasks that you may already do. So I highly encourage you to take a look at our Infinity products that will, make savings super easy, and you won't even know that you're adding to your savings account each month. But let's move on to our key sites too.
Katie?
We mentioned,
Can I just touch on the bank itself?
absolutely,
And
Bob.
I know you mentioned in the beginning, we've been around since 1874. And I'm going to tell you that we have the same products that the big banks have. We will meet your personal banking needs here. So just because we're Manasquan Bank doesn't mean that we don't have an office around the corner from you. We have remote deposit, we have direct deposit, we have ACH, we have all the products that the big banks have. And as Katie mentioned before, our website, you could do everything online. We prefer, you to come in and see us and open an account just so we can better help you understand your needs and recommend the right product. Because too many times you in an online lending process, people think they want one thing and they go online and order it. And many times there are order takers out there in online services. They're assuming you know what you want. They're assuming you know where you want to go. We take the time to sit down with you, understand your needs, and then recommend the right products. So we could go on to the key sites, Katie.
Bob, thank you so much. Yeah, so our website is here, but you do not have to take a screenshot. We will be following up after this call with all of these key sites, so they will be available to you. But as Bob mentioned earlier, Credit Karma, Experian, Equifax, TransUnion, and that Homebuyer Dream program that Ralph was talking about earlier, that is the site that you will access it. But we do have many questions that I want to get through before the end of the night.
Sure.
So we are going to move on to if estate planning were the only consideration, in which state or country would you choose to reside, Bob?
That's an interesting question. So again, that's a personal choice. For estate planning purposes, you really should talk to your financial planner, somebody who's close to you, who really understands your financial position. As far as where you want to live, there are many, many considerations, right? You have family considerations. Later on in life, when you have children, grandchildren, whatever, or your parents, cousins, aunts, uncles, you may want to stay local. Some people say, well, I don't mind moving away. I don't mind moving an hour away. So that's really a personal question.
Right. Moving on. Best time to use a HELOC to purchase a second home?
Well, I mean, there's no good or bad time to use a HELOC. Rates on home equity lines of credits are increasing just like rates on first mortgages are. The home equity line of credit is based on the prime rate, and the prime rate has risen dramatically this year, and it's supposed to increase by possibly another 1.5 before the end of the year. If you do have the equity in your current home that you want to use to buy a second home, by all means do it. With the home equity line of credits or the home equity loans, the advantages are that those closing, most banks do not charge, and we do not charge any closing costs on a home equity loan product. The disadvantages are the interest rates are a little bit higher on second mortgages, and the term of the home equity loan, the longest term that we offer is a 20-year term as opposed to a 30-year term. So with the shorter term, obviously the monthly mortgage payment will be higher.
Katie, if I may add something back to the prior question, you may want to also come in and speak to one of our lenders. Because again, what we can do from an estate planning perspective is we could tell you and explain to you the cost that may be associated with any type of lending product, which again would in turn also assist your financial planner or accountant or somebody else. So we really work hand in hand with the financial services industry, such as accountants, financial planners, attorneys. So I can't stress that enough. We can also aid in that as well.
Thank you, Bob. Thank you, Ralph. We did receive another question in the chat. Do you provide mortgages for purchases in Pennsylvania?
So today we operate in the state, all of New Jersey. We do loans for customers, current customers of the bank, if they have an out-of-state request. So again, if you're a current customer of the bank, we're more than happy to take a look at it for you. What we can do for you is that if you decide to buy out of state, you're going with an out-of-state lender. If you want, we'd be more than happy to take a look at. You're going to receive a document up front when you apply called the loan estimate. The loan estimate, and we should have mentioned this before when you're dealing with some online lenders or other institutions, a loan estimate details all the costs that would be associated with this loan request. From there, a professional like ourselves would be able to tell you if that's a good deal or not. Even if you're buying out of state, you're with a mortgage company. I'm not picking on mortgage companies. Even if you're out of state looking at something, we'd be able to tell you if they're charging you exorbitant fees.
Thank you. And our last question, unless we do have a few more minutes, if anyone wants to put one in the chat, but how do I make buying a home feel more possible?
You want that one, Bob, or you want me to?
Go ahead, Ralph.
Well, I think it's repeating what we had said before. You want to meet upfront with a experienced loan officer. And, you know, before someone had asked how long a pre-approval is for, and I said it's for 120 days. But it's important to meet with a loan officer at any time. If you think you're going to buy a home 6 months or a year from now, meet with an experienced loan officer now. We can tell you where you are right now with your search, with your credit, with your income and so forth. And we can guide you on maybe what changes you need to make so that you're ready in 6 months or 12 months from now. Also, starting early, we're going to run your credit report right now. There might be things on your credit report that you are not aware of. So we'll take the time to go over that with you and tell you what you need to correct and how you can correct it. So to make the process easier or more enjoyable, start the process as early as possible and start it with an experienced loan officer. I can't stress that enough. You want to deal with an experienced and a licensed loan officer, not just a loan officer that's registered with the state. A licensed loan officer, what that means is just like an attorney and a CPA and a realtor, we each year have to take continuing education courses to maintain our license. Not all banks require you to be licensed. Here at Manasquan Bank, every one of our loan officers are licensed. We're not just registered. And registered means they do a background check on us, and as long as everything checks out well with us, they give us an identifying number, and that means we are allowed to originate mortgages. So basically, anyone that has a clean record can originate mortgages, but that doesn't mean they know what they're doing. They're not, you want to be educated and you want to continue to have to update your education. And that's what we are here at Manasquan Bank. Our loan officers are all licensed and we have many years of experience. Each loan officer that works here right now has over 20 years experience in the industry.
This is the dream of owning a home is a process. It truly is a process. And when you think you understand it, there'll be other questions that are thrown at you. There'll be other things that come up. You want to make sure that you have a good team around you. As Ralph said, you start with a good lender, you'll find a good attorney, you have a good realtor, and everybody works together to help you realize that dream. And that's what we want to be part of in your lives. That's why we're having these events. That's why we're here. Anybody can go out there and make a loan. We want to sit here and help you get there. There's nothing better than when we attend a closing and we see the look on people's faces who bought their first home. We get pictures sent to us. We get letters sent to us. It's such a satisfying and rewarding experience for us internally. So we want to help you get there. That's really what we're about. If any takeaways tonight, again, do your homework. Know or get a better understanding for what you can afford. Know and do your homework with where do I want to live? What type of home do I want to live in? Condo, townhouse, a house. And that's really all I can say tonight. I mean, I'm going to say good luck in your process. Hopefully we'll be part of it for you. Again, we'll be a resource. We're going to help you get there. Ralph, anything you want to add?
During the process, don't ever be afraid to ask a question. A lot of my clients say to me, I hate to bother you with this question, and it's probably a stupid question. And I always tell them, there's no question that's stupid. This is what I do for a living. This is your first experience. Please ask me any question. I want you to be comfortable with every phase of the process.
Correct.
Ralph, well, I think you shared some really great information tonight, and we're so thankful that you took the time to join us. It is 7:02, so we don't want to go over that 7 o'clock mark anymore else. Any final thoughts, or we're good to wrap up?
No, I just wanted, Katie, again, we're going to send out the presentation. Are we going to also be able to accept questions after the fact that we can respond to individuals?
Absolutely. So after the call, we're going to be sending a post-event survey that has the opportunity for those to ask additional questions. So stay tuned for that, and we will also be sharing a recording of the seminar.
Now, by the way, on our website, which you'll receive the link, or you'll see the link to, we are available. If you go to mortgage lending on our website, you'll see my name, my face, my contact information, Ralph's contact information. We have direct lines to our desk. Our phones ring on our cell phones. So we're here for you. So if you think of anything, please, as Ralph said, don't be bashful. The only stupid question are the ones that aren't asked. So we want you to ask questions. We want you to be comfortable. So I can't say thank you enough for attending tonight, and hopefully we'll see you again.
Yes,
Thank
thank you
you.
so much. We do appreciate it.
Well, this will conclude our seminar. Thank you, and have a great